Good morning, it's Robert Young. It's Saturday the 27th. It's around 11:30 a.m. I wanted to come to the office. I wanted to put together a little brief video to kind of give you an idea of what's going on in the markets after Friday's 2.5% drop, 700 plus point drop. Some significant things are occurring. I want to let you know what we're watching, and also more importantly, how we're going to be able to take advantage of it and the impact that these drops have had on your account. So first off, I just want to say that the market has been extraordinarily resilient in the past 8 weeks, in spite of very negative financial news. And it's very clear you have to remember this, right? Valuations of the stock market, price of stocks are based on what people think that the company is worth based on revenues, earnings, projected growth, etc. And the last earnings season we just went through a few weeks ago, the majority of analysts in these companies just walked away and just said, we can't even give you a projection. We have no clue how to factor in the impact that the recession, the artificial recession, has been on our companies. And so they just basically left a big X factor out there in terms of projections for growth. So that left people to just wonder, well, what should we invest in? Should we just invest in the fact that the company or the country is reopening, and that ergo it will eventually all be wonderful again? It's rainbows and unicorns. And the reality is that it is going to take a long time for our economy to come back to the pre-recession levels. At the February 19th level of 3,300 and change, the S&P 500, the peak of that market, when unemployment was at 3.4%, bars were open, restaurants were open, planes were flying through the air, people were driving across the country. Those days will take a long time to return. So it seems absolutely incredulous to me that the market has risen almost to those same pre-recession levels in terms of valuation. Now just think about that for a second. As of Friday, Texas and Florida did the most heinous crime imaginable, in my opinion, and that is they closed bars. They said no more bars can be open. If you don't serve food, you can't be open. So restaurants with a bar can still serve their patrons, but if you're a bar, can't do it any longer. Awful, just awful. Second thing is we've had states like New York, Connecticut, and Jersey say to the southern states, including Florida, hey, don't come to our doors. We really don't want you here. Europe has told America, don't visit. We're basically not going to allow you to come in. Arizona has had a spike in coronavirus and deaths associated with the coronavirus. The reopening of the world, and America in particular, has had a major setback over the last couple of weeks. And by the way, I am a huge proponent that we should have reopened a long time ago and just addressed this on a personal level. But we've also had other things occur. We've had revenues of corporations have dropped. Let's face it, the enhanced payments for unemployment will be running out in July. The PPP program, the forgivable loan program that has allowed businesses to sustain themselves and pay employees, that money is running out. So we're going to see a significant spike or an increased spike in unemployment filings in July, August, September. That will drive the ability for people to spend money and therefore to purchase products, and revenues for corporations to go down. We've still got Facebook and Twitter on Friday just announced that major corporations have pulled ads off of those platforms because they believe that those two platforms have not done enough to censor hate speech on those platforms. And so now the revenues of Facebook and Twitter are going down. And then most significantly, banks were told by the Fed on Friday that they could no longer, or they need to cut their dividend, but more importantly, they can no longer buy back their stock. And by, of course, buying back their stock, that meant fewer shares out there, which meant that the value of those shares would go up. It's a neat little trick, and it's legal, but it's a trick. So we've had some significant impact just in the last week of projections of revenue. Now, that's part of the reason why the market sold off. The other part is that the market dipped below its 200 moving day average, which is significant. We may see a spike on Monday of people buying in. Big pensions and institutions look for that 200-day moving average. When that's broken, they tend to buy into it because 200 days, of course, 1 year's worth. And if the average is here, these big money thinks that, hey, this is sort of a support level and let it rise up. Well, we're going to take advantage of that. The same way we've taken advantage of buying Boeing. We initially bought Boeing at $340 a share, thought I was a genius, and then it dropped down to $100. We bought more, bringing our cost down into the low twos. Now, it got to $190 and change about a week or so ago. Boeing's got some great news. I'm not going to go into detail of every stock that we're in. I'll just say that it's an example. We did it with our aerospace and defense fund. We bought in when it really hit a low point, and we brought our cost down so we can get out sooner rather than later. And more importantly, we're going to do that with the S&P 500. People are in the S&P 500 from the 300 mark on to about the 285. I'm going to be buying it on Monday. I'm going to be adding those positions. I'm going to dollar cost down. The average dollar cost will be at 287. That doesn't mean anything for you. I would just tell you this. Over the last 2 or 3 weeks, we've seen the market spike above 287 3 or 4 times. That's going to be important because I believe, as does my team, that we are going to see a run up in the market over the next couple of weeks. We're going to take advantage of that. Once it crosses over our line, we're getting out. We're going to go to cash. We are going to sit the majority of your accounts in cash through August, September, October. We're going to wait until all this is settled and we have solid economic numbers on which to base our investment decision. That is what we do. That is what I'll be doing. I'm going to get you out of this. I'm going to make sure that you are whole, and I'm going to protect your downside. So, if you have any questions, concerns, I planned on spending Monday calling people. I'll spend a couple hours, but for the most part, my Monday will be spent investing in adding to your S&P 500 position so that we can bring your dollar cost down so that we can get out sooner rather than later. We think the run-up will occur over the next couple of weeks. But if you have any questions or concerns, please bear with me. I am making calls Tuesday, Wednesday, Thursday, Friday, and then next week also until I get on everybody's calendar, either through a webinar meeting, Zoom meeting, face-to-face, carrier pigeons, whatever it takes, we will be in touch and communicating. Thank you for your patience. Just want to let you know about this capitulation, what's going on. We still believe the market is about 5% overvalued at this point. So I want to make sure we get a chance to get the run up and get out and sit in cash to be able to take advantage of this. Thank you. If you have any questions, please reach out anytime. Hope all is well. Stay safe. Stay sane.